Good evening, everybody. Thanks for tuning in to another gold breakdown with FX.GOLDSMITH. Today's date, 2023, 10/08, Thanksgiving long weekend. Hope everybody's enjoying that. Just here for a super quick breakdown on kind of what happened towards the end of last week and what we can expect to happen this week starting off, and kind of see where we can get some potential trade or trade ideas and predict where price is going to go. So let's get right into that. Let's see what happens. So I have a few levels marked up here. End of last week, obviously, as you guys can see, we pushed down from the 1920s and we tapped our 1910 target here, as posted in the Discord channel. If you guys aren't following that, feel free to join the group using my link on Instagram, FX.GOLDSMITH. Okay, so let's get right into it here. 1810, looking left. Very strong support here on the weekly, and I'm sure coincides with the daily time frame. As you can see, when you approach this 1810 level and close above it, let's get a rectangle there for you guys, and close above 1810, you get a pretty good bounce. So looking here in February of this year, when we closed there, we rejected, came up to about 1865, had another double tap here on the smaller time frames, and continued all the way bullish. So similarly here, when we're coming into 1810 from a bearish perspective, we bounce into 75, and then we rejected for a retest and ended up closing below. So as you can see, whether it's a support that gets broken, it turns into a resistance, etc. So 1810 was a very strong rejection level. Let's see what happened for the start of this week here. Sunday market open. We have broken the high already with no bottom wick. So I would expect maybe some rejection in and around this 55 level. You'll see why I have that marked up on the lower time frames as well. But ultimately, I need, but I would expect a bottom wick here on the weekly and the daily time frame. So let's drop down to the daily. Let's see what we have in store here. Wonderful. So looking left as well, you can see that we had a double top rejection here on gold. Means in 1810, we bounced to 56, 55 areas, and we're talking about that to the 10 areas. So that's why I have this resistance in here, is because it's a significant psychological level, hundreds of pips. So looking even more left, what do we see? There's some rejection here. Okay, wonderful. It's 77. Ultimately, as you guys can see, gold has been nothing but bearish, not a single bullish candle for, probably a week or two here. So there's a lot to be said about these 1,000 pips. How far are we going to correct, right? I would love to see 1875 tap, maybe even into the 1900s, etc. But we're going to need kind of more than one tap down here. We're going to need to form some structure, maybe even tap this 1810 again for a continuation, just like this, reject here to go all the way up, right? We are still very bearish biased. So don't get caught up thinking that we have to come all the way back to 1884 and get caught taking buys at the highs, etc. So we definitely need to ensure that the steps has been both candles and closing and forming in a direction in order to confidently take the positions all the way to the next zone and correct at least 50 to 75% of this move. As you can see, we have already kind of started to do some of that. If it's 700 pips, there's 50% kind of right in there. So another 350 pips to go to kind of your top of a daily zone. Let's see what we can find out on the 4 out of time frame here. Okay, so with news, the late end of the week, last week, Friday, we failed to close below here. Failed to close below, as you can see from this wick rejection. And now we are traveling bullish. So this is our resistance and support. This up here for the 4 hour. Up here at 57.60 area. This was a support that was broken, now turned resistance. And you can see it's already starting to reject there. So essentially what you guys want to do is enter positions at these key psychological levels where you have a lot of rejection or reversals. Let's look left, make sure everything lines up. Wonderful. Okay. So let's draw some candles out just to see what we can expect here. We know for the most part, this candle next 40 minutes is going to close bullish. So let's draw you some candles. Because we can see that this is going to close bullish, you can anticipate the next one to close bullish as well. A wick to an area of rejection, right? Lines up right there. Okay. Closure below 56, 57, 60, etc. Right? So closure below, which means, okay, until you get a bullish closure above here, we're not expecting price to reach our 75 quite yet. So let's draw another candle. Unless you get something, draw one of these. Unless you get something closing fully above, then you know, okay, you can take this monster candle all the way up. All right, retest that level smaller and continue. But until you get this closure above, you can't assume that. So let's erase these two. And let's draw the inverse of that. So failure to close above. Rejection. That's what I'm anticipating happening, right? That would mean that we have broken a low here to give the weekly and the daily. And then we can start from here, maybe creating more structure, retesting 1830s again before ultimately coming back up and creating even a new high into here. Retest support, make a new high, right? So this is kind of what I'm predicting to happen. We need entries up around your 57.60 mark on the lower time frames, or even if you're someone who takes swing or intraday trades off the 4 hour, etc. We need this to either print in our direction or be a counter candle entry off of the lows, etc. So wait for something in your direction and try and enter at these key zones. Down here at 1830, we're looking for buys. Up here at 1860, we're looking for sells. Of course, on the lower time frame, you're going to get some structure printed. So depending on how it prints, once we have tapped these key levels and then say we create a resistance here at 1850, then sure, right? High volume time, take that bearish push all the way down, but make sure that we have tapped at least once, if not twice, into these key zones before entering positions. So that's what I'm looking at to happen here. I've kind of drawn out two scenarios with the 4 hour closing above these highs and then cruising all the way to 77, 75 type areas. So it's always good to have a pre-planned kind of analysis, you guys. You don't want to go into the market blind, and you want to have kind of some analytics behind you so that when things do present themselves, you have all the confidence in the world to not only execute, but hold your trade to the maximum. So let's see what's happening on the time frame here. Okay, 1857, big rejection. We got to retest there with some news, and then we continue all the way down. So on a smaller time frame basis, what do we have? We have this as well. So let's just say that we come up here into this. We don't close above. We're consolidating. We're ranging. It is a holiday tomorrow as well, you guys. So probably not going to get a lot of movement. 1832, 1833, that's a resistance turned support. We have now closed above that area. So anywhere in these areas would be that take profit for your sells coming back down, right? You have to have to look here left to 1840. was a key area, 1845. So these chunks of 50 pips here, some potential rejection zones, just like we've done here. We've come down 1850, closed above, retested, broken the high, created a support, right? So until we come all the way into here, consolidate, collect orders, start rejecting, that's when you can anticipate this whole impulsive move to be corrected 130 pips. So that's what I see, guys. I challenge everybody to kind of do their own analysis and own homework, especially over the weekends here on a Sunday to get ready for the week ahead. Again, it is a holiday for tomorrow, so you guys can always do that then. If not, definitely check out mine. Enjoy the turkey, enjoy the stuffing, and thanks so much for watching, you guys. Cheers.